I don't believe adjustments are the hardest part of valuing real estate. I believe believing their guesses is what causes investors to overpay. That's a costly mistake. After more than 22 years as a professional real estate appraiser, I've learned that adjustments aren't just opinions, they're based on real market evidence. If you get them wrong, you could overpay or walk away from a great deal. Hi, I'm Brandon Beard, founder and CEO of Grow Wealth 101 and a real estate investor and professional appraiser of more than 22 years. When I first began appraising real estate, I thought adjustments were simply numbers you plugged into a report. Then I realized something. The adjustment isn't the important part, the thinking behind the adjustment is. The adjustment is simply a way of answering one question. Would buyers pay more or less for this difference? That completely changed how I evaluated real estate. Today, I don't look for formulas, I look for buyer behavior. And that's exactly where many investors get adjustments wrong. All right, let's talk about adjustments. Adjustments are just guesses. The answer is no. A professional adjustment starts with market evidence. Buyers reveal value through their purchasing decisions. All right, every extra bedroom has a fixed dollar value? Well, maybe, maybe not. Let's look at what the market says. It may depend on the price range of the home. It may depend on the neighborhood. It may depend on buyer expectations. It may also depend on the overall market appeal with the home. So take those into consideration. All right, there's a formula for every adjustment. Well, there are methods in which to do it, but there's not necessarily one universal formula. Markets behave differently. And that's where I can show you with Grow Wealth 101 how to deal with those adjustments and how to extract those from the marketplace. Okay, are two houses exactly the same? Would they require the same adjustments? Well, they likely have some differences. Let's identify those differences. Well, this home has an updated kitchen. This home has an updated bathroom. This one has an updated kitchen, but not an updated bathroom. Look at those situations. Let's also look at the lot size. The lot size can really have an influence. Let's look at location. Is the property located near a good school? Is it located near neighborhood shopping? Is it located near recreational activities? Those are things you want to look at. Adjustments make valuation subjective. Let's discuss that. The goal isn't perfection. The goal is understanding buyer reactions. Evidence reduces subjectivity. So, how should investors think about adjustments? Let's look at 4 questions behind every adjustment. Question 1, would buyers notice this difference? Well, if the buyers notice the difference, well, you should probably notice that as well. That's why it's very important to become informed in your market. What are those expectations? Everybody, look at that. Is it the bedroom count? Is it the bathroom count? Is it the car storage? Is it the location? Look at that. Let's discuss some more cosmetic items. How about paint color? Is paint color something that you should consider? Well, I can tell you neutral colors are the better way to go. Loud colors, colors that are not in tune with the market, you may want to consider painting the home. Okay, this is something relatively minor. It may cost you a few $1,000s, but in the long run, this is something you really need to consider. Let's look at updating flooring. Flooring is a big factor. You want to go with flooring that is low maintenance. If you're having to replace flooring every single time a tenant moves out, you lose. So you want to go with heavy-duty flooring. Now, it may be common to have carpeting in your marketplace. That's fine though, but keep in mind though that may not be the best for a landlord once tenants start to move out. Let's look at other amenities. Let's look at garages. Once again, car storage, consider pools. In some markets, pools may contribute very, very little, but in other markets that may be more commonplace, such as for properties that are short-term rentals. Would buyers pay differently because of it? Well, some differences matter, others don't. Let's talk about cost. That cost does not necessarily equal value. A $40,000 renovation doesn't automatically increase a property by $40,000. I'll tell you a story. Years ago, I appraised a property on one of our nearby resort areas. And this property was built to the top of the market. It was built during the COVID pandemic. And so the cost to build this property is very high. The builder and I had a very candid conversation about costs. And he said, well, if I take my land and I add my cost, that is the value of the property. Well, I told him that that may be the case, but does the market recognize that? That's why when you're building a new property to rent it, you have to consider, are you paying too much to build that home? I would definitely shop around to make sure that you have a quote that is in line with the market. But do not always assume that value is associated with costs. Is a difference typical for the neighborhood? Let's talk about that. We talked about pools, whether the market commands that. We talked about large workshops in the past. We talked about detached structures, pole barns, equestrian centers. I had a property several weeks ago that involved an equestrian center. The market did not recognize that. That likely would not be a good investment property. Luxury kitchens. Yes, if it's an owner-occupied property, a luxury kitchen may be the way to go, but I will tell you all, that may not be the best thing to do for an investment property. Extra acreage, that may be something that you could sell off. Does the property have surplus land versus excess land? And surplus land can be sold off and developed into a new property. And so surplus land is something that you have to keep with the property. Excess land, to buy a property with excess land may be a great thing to do. So take that into consideration. What does the market tell us? Well, appraisers don't invent adjustments. They study buyer behavior. The market provides the evidence. Adjustments aren't about making houses equal. They're about making good comparisons and fair comparisons. All right. Adjusting based on renovation costs. A big mistake that people make, assuming every extra bedroom has the same value. Well, look at different sales, look at competing neighborhoods, look at competing subdivisions. That may or may not be the case. Another mistake, thinking bigger is always better. That is a big mistake that I find investors make. You may not need a 2,500 square foot home. You may need a 1,700 or 1,800 square foot home to make it work for a rental. So take that into consideration. This is not a property that you're living in. This is a property in which you're looking to make money. Another mistake people make, treating unique features as if every buyer would pay for them. I will tell you, an investor may not pay for that. An owner-occupant may pay for that. Let's look at that from a scale of what an investor needs to pay. Forgetting about neighborhood expectations, another big mistake. If the neighborhood doesn't need that particular feature, that's fine. You don't need that feature when buying a property. Another mistake, making adjustments because it just feels right. Don't make it because it feels right. Make sure that the market is supporting what you were considering and asking what buyers and how they would react to this. Remember, buyers determine value, not spreadsheets, not opinions, and certainly not wishful thinking. Let's reinforce today's lessons. If you remember one thing from today's lesson, remember this: adjustments aren't guesses. They're evidence of how buyers respond to differences between properties. The better you understand buyer behavior, the better you'll understand value. That's what value intelligence is really about. Not memorizing formulas, not chasing shortcuts, learning how to think like a professional appraiser before you invest your money. If you're serious about becoming a more confident investor, I'd love to invite you to join our free Grow Wealth 101 community. I'll drop you a link right in the description for you. That's where you'll continue these value intelligence lessons, answering questions from real investors, and helping everyday professionals how to evaluate deals with evidence without emotion. Now, we've covered market value. We've covered comparable sales and adjustments. It's time to put everything together. In the next value intelligence lesson, I'm going to show you how to bring these pieces into one complete valuation process. The same logical framework I use to decide whether a property deserves a closer look or whether it's time to walk on. Join me for that lesson, and I'll see you inside the community.